he wants to do all these tax cuts, lower the corporate rate to 15%. And the difference is when you have all these carve-outs, these small deductions and stuff, there's less revenue so to pay for those other bigger tax cuts.
Right.
So it kind of gets a difficult situation where you're further digging the U.S. into this fiscal hole that it's already found itself in. We're $35 trillion in debt, and when you start doing these things, they cost money, and without that revenue coming in, it makes it very difficult.
Welcome to Reporter's Notebook, where we talk to the Washington Examiner's top journalists about the stories breaking on their beats. I'm Jim Antle, and I'm joined today by economics reporter Zach Halaschak. Zach, we're entering the home stretch of the presidential race, and Biden-Harris team have got some good news on inflation, no?
Yeah, so the personal consumption expenditures, which is the Fed's favorite gauge of inflation, it's called the PCE index, if you ever hear that, it actually fell to 2.1% for the month of September. And, that's really close to the Fed's 2% target. So really, on the campaign trail, Harris and her surrogates get out there and say, look, yes, under Biden, inflation might have gone this high, but it's now back to healthy levels, that 2% level. But I will say, if you kind of look under the hood a little bit on the inflation data, core inflation, which is inflation that's stickier and excludes things like energy and food prices, is actually running at 2.7%, which is still above the Fed's 2% goal. So it's like any data, you could really look at it, and there's several stories in it. But I think the top line is that it's good news for Harris heading in, but I don't know how much that's going to do with voters who have been dissatisfied with inflation for 4 years now. Just doesn't really translate through sometimes.
Right. They've been citing a lot of aggregate economic data, but public perceptions of the economy and the fact that, when inflation goes down, it doesn't mean prices go down. So, people are still feeling the effects of that.
Exactly. And that's the thing. We have 4 years of cumulative inflation so it's basically if you're looking at how much things cost now versus when Biden in office, it's around 20-something%, 20% or so. So that's kind of what voters are comparing from. They're not saying, well, last year I'm only paying 2% more for this, bag of Doritos than it was last year.
Right.
Paying 20% more at the grocery store. I'm paying 20% more at the gas pumps, that sort of thing.
So another economic metric that Harris has been touting on the campaign trail has been GDP, and we've gotten some new figures there as well.
Yeah, we got the first numbers for the quarter three. And GDP came in, which is a broad measure of overall economic growth, came in at 2.8%. So a little down from the 3% the quarter before, but that's still robust. And it still shows that despite all the headwinds from the higher interest rate environment and other factors, that the economy is still expanding, it's still growing, and economic output is still there. Again, another thing that you would think in a normal election year you could tout and say, look how good the economy is doing right now, better than a lot of the Western European countries and comparable countries. But really, again, the voters are more focused in on the overall vibes and how they feel about the economy, and that's not good right now.
So former President Donald Trump has a tax plan. He's a Republican presidential nominee, as we all know. There are some aspects of it that sort of are very familiar for Republicans and others less so. What are your takeaways?
Yeah, so the familiar parts are the cutting taxes. Republicans have always wanted lower tax rates, that sort of thing. But if you look a little more deeper into it, Republicans have long talked about this idea of broadening the tax base, broadening the base. So opening up more tax revenue by doing things, just capturing more tax revenue in order to lower rates overall. And so what you're seeing is kind of the opposite of that from Donald Trump. You're seeing him propose things like eliminating taxes on Social Security. So again, targeting a small subsection of the population, in that case, elderly people and seniors. You're seeing another proposal that he announced in Nevada was eliminating taxes on tipped wages.
Right.
And that, again, targets a very specific subsect of the population. So in a lot of ways, these are different than Republicans' kind of tax policy of Republicans of years past, and almost like an about face. But at the same time, he wants to do all these tax cuts, lower the corporate rate to 15%. And the difference is when you have all these carve-outs, these small deductions and stuff, there's less revenue so to pay for those other bigger tax cuts.
Right.
So it kind of gets a difficult situation where you're further digging the U.S. into this fiscal hole that it's already found itself in. We're $35 trillion in debt, and when you start doing these things, they cost money, and without that revenue coming in, it makes it very difficult.
$1 trillion here, $1 trillion there. Pretty
Yep.
soon we're talking about real money. Thank you, Zach.
Yep.
You can read Zach and the rest of our policy team's coverage at washingtonexaminer.com.